Hi, this is Professor Cataldo, and I'm going to walk you through an example of prepaid expenses. This material is usually covered in Chapter 3 of an introductory financial accounting course. Let's assume that I prepay insurance for 6 months. It could be automobile insurance at a cost of $600 or $100 per month. And I do that on January 1st. $100 will be matched to the period each month as an expense in the income statement. If I pay it on January 1st, that means for the month of January, February, March, April, May, June, each and every month, I'm going to have $100 of insurance expense. The balance of the prepayment that has not been consumed, it's an asset, will decline each month but remain in the asset section of the balance sheet until completely exhausted or until it is expired. Here's an example of all of the journal entries. Each and every one is in general journal form. Now, I've written these in general journal form, but the first is in the cash disbursements journal. That's the debit to prepaid insurance expense and the credit to cash. All the credits to cash are recorded in the cash disbursements journal. That's on January 1. I prepay the account. Each month, January, February, March, April, May, June, I will debit insurance expense and credit prepaid insurance. I'll do that in the general journal. And again, all these journal entries are written in general journal form. On the left-hand side, this is what the prepaid insurance asset account in T account form looks like. Initially, there's a debit balance of $600. During January, in the income statement, I expense $100. The new subtotal is $500. I expense another $100 in February. The new balance is $400, and so on. This is what a partial balance sheet, a partial income statement will show. I've named it ABC Corporation. The balance sheet at January 31st, after 1 month, will have a balance in prepaid expenses of $500. There's the journal entry right below it, where I credit prepaid insurance expense for $100. Recall, I started with $600. I expense $100. I have a new balance of $500. On the right-hand side is the income statement. That's a partial, where I show insurance expense of $100 for the month of January. There's January, partial financials in the journal entry. There's February. The prepaid balance has dropped to $400. There's March, the prepaid balance has dropped to $300. April, the prepaid balance has dropped to $200. May, the prepaid balance has dropped to $100. And of course, by June 30th, the end of the 6 months, the prepaid insurance expense, the balance is $0. Thank you.